Hi, this is Regan Guth with Diversified Insurance Group. Diversified is one of the leading brokers serving publicly traded companies and large privately held organizations in the Intermountain West. We have a lot of experience in placing directors and officers liability insurance for these companies. In fact, we have been the preferred choice for insuring IPOs, insuring 23 of the last 29 IPOs in the state of Utah. Providing market education is one of Diversified's core missions, and so we want to take a minute and provide an update on the state of the D&O insurance market. We find ourselves in the midst of a very challenging commercial insurance market at the macro level. There are a few hot spots, and one of the sectors that has been hit the hardest is public company directors and officers liability insurance. In the insurance world, when we talk about a hard market, we are generally referring to increased pricing and increased rates. However, over the past 2.5 years, the D&O market has experienced challenges beyond rapid price increases. We are experiencing additional challenges of limited underwriting appetites, reduced limit capacity, and increased self-insured retentions. As if 2020 didn't present enough challenges, we are now experiencing the most difficult public D&O market of the last 30 years. There are several reasons for this hardening in D&O market conditions, but there are 3 primary themes that stand out. First, securities class action claims. There has been a substantial increase in the number of securities class action cases filed in the United States and in the dollar amounts of settlements over the last 5 years. To put this into perspective, publicly traded companies now have a greater than 5% chance of being sued each year. And this trend has increased each of the last 5 years, setting a new record each year. Second, case law developments. In March 2018, the Supreme Court ruled that the state courts, in addition to federal courts, can have jurisdiction over securities class action lawsuits as it relates to the Securities Act of 1933. Of particular concern is Section 11 of the 33 Act, which relates to the strict liability that directors and officers have for the 2 years following a public offering of securities. This means that claims against IPO companies can be brought both in state and federal venues simultaneously. What's worse is that state courts aren't as experienced with federal securities laws and don't allow for a stay in discovery during motions to dismiss, and have become increasingly problematic for insureds and insurers to manage overall, most often leading to quick settlements at higher amounts. Third, the economic uncertainty arising out of the COVID-19 global pandemic has caused underwriters to fear increased litigation resulting from shutdowns, layoffs, delayed fundraising or product launches, supply chain disruptions, a general increased risk of insolvency and stock market volatility. As a result of these challenging factors, we're seeing D&O rate increases of 60 to 70% on the low end and upwards of 300% on the high end. And to top that all off, most insureds are being forced to take higher retentions, and others are even required to include additional restrictions like coinsurance or reduced limits of insurance. For example, if you're an IPO company in the 4th quarter of 2020, you should expect to pay 4 to 5 times more for $10 million of D&O insurance than just 3 years ago. And the retentions will have increased 4 to 5 times as well. So what does this all mean? Are we just throwing our hands in the air and resolving ourselves to overpay and be underinsured? While I can't promise you that you won't see rate increases or coverage decreases, I can tell you that a good insurance broker will help you navigate these troubled waters. Working with underwriters early in the process to increase the level of communication and information sharing can certainly help to dampen underwriters' fears. Additionally, a broad, comprehensive marketing strategy and creative coverage design options can further improve the outcome of securing the most favorable terms available for your renewal. If you have questions or concerns regarding your D&O insurance renewal, please contact us. We would love to share our team's 90+ years of collective experience to help you with your D&O insurance program.